Happy Tuesday to you. It's July 19th. Joe with you here, Market Roundup. Let's do this. My Mavericks, as we had a pretty interesting day considering Monday, pretty much the exact opposite. I've got my 2 cents. I'm going to show you what I think. Take it for what you will. You guys know the drill. So let's get into a market analysis, as I believe the markets were giving up a little bit of gains at resistance, but boy, quite a different tone today. We had a gap up and the markets just continued higher. A couple things to make note of. First of all, let's go to the daily news cap here. Markets push higher after yesterday's retracement, and that's about all I got. I was digging through the news. There's nothing too specific out there. We do have some earnings announcements out. We had some last week, or I should say yesterday. We're going to have some the rest of the week going into next week, so on and so forth. But right now, they're kind of mixed. Some are good, some are bad. I just think it's the overall motion of the ocean, if you will, when it comes to the traders and their sentiment. Housing starts were lower than expected, but it was still expected to decline. We knew that was going to happen. It would actually be kind of neat to see not only housing prices come down, but rents come down, because that would be a massive curb to inflation, which ipso facto, folks, is going to be bullish for the markets. If inflation can, sustain itself or even fall apart or go down, then we know the Fed's doing their job and it's going to be bullish for these markets. So keep that in mind. Now, this was a general buy across everything. We'll take a look at the heat map in a second here, but look at this. Almost 2.5% in the Dow. The S&P over 2.25%, 2.75%, excuse me, in the Nasdaq, comfortably over 3%. Russell's 3.5%. Oil did go up as well. I made mention of this yesterday as everything was coming off of the highs. The markets gapped up and actually really respected that resistance level coming down, and oil stayed higher. Oil stayed higher again, but look what happened with the overall indexes. Very, very bullish. Gold pretty much flat on the day. Now, guys, the advanced decline line, everything participated. 81% versus 15% advanced decliners. Not a lot to the bear side. Seeing the above below 50-day moving average was also pretty interesting, as we are almost 50-50. I mean, that is climbing quite a bit at 57% below and 43% above. So that leaves me with what these markets are doing. And we have a beautiful move to the upside in these markets. I do like the fact that it's retest that 390. It's showing that it's poked its head above it. We're talking about a little bit of a consolidation here in this area, and it seemed like yesterday it was going to retrace that. But I did make mention of this, and I want to add to it again, is the volume really just didn't do much. Today's volume was a little bit more, or I should say a little higher than it was yesterday, with a nice gap higher. So the markets gapped higher from yesterday. I mean, this is where we closed yesterday, folks, and this is where we opened. So a beautiful little gap up, and instead of coming back down like it did Monday, it just continued higher, and it's poked its head not only above the 50-day moving average, but above resistance. So super optimistic for now. I mean, that can completely change. We know how the markets work. We'll just see where it goes from here. Now, I've got the Qs doing pretty much the exact same thing. Let's see if I can't get my lines out here, folks, because it did get above a resistance area on Monday. Even though it came back below the 50-day moving average, it's poking its head back out above it. Now, something a little bit more, I don't want to say the word ominous, but it's not as aggressive, or I should say as good as I see the SPY, as the volume was slightly lower today. It just could be reluctancy when it comes to, hey, here we are, let's poke our heads out, what's going on. A little side note, folks, I'm going to get there at the end slide. Netflix actually came out and actually did a little bit better than expected. They're expected to lose a lot more subscribers than they actually did, and it's got the stock so far moving a little bit higher. I don't know where that's going to end when it comes to tomorrow. Your guess is as good as mine. But where the Nasdaq is poking its head slightly above the 50-day moving average and resistance, and take a look at this, guys. We do have an ascending triangle pattern kind of forming here. So you know me, folks. I don't want to be super optimistic. I know that this is a bottoming move, and this usually takes months. I do think that we're going to run into some recessionary problems down the road. Whether the markets give a crap or not is completely irrelevant versus how we feel. Keep that in mind, folks. The markets don't directly relate to the consumer. We're usually a little bit behind. So if the markets are moving higher off of a low and you and I are struggling to make mortgage payments and buy gas, it's because they're already 6 months ahead of us. That's my opinion. That's kind of what I've seen, so we really can't coordinate the two. However, I'll give you this. Everything went up. Everything. Now, whether this was just a program purchase off of the bottom and you had 15 different types of hedge funds come in and decided to buy every single stock all at once, or there's something substantially going on here when it comes to the mood, or I should say the sentiment of the investor. It's way too early to tell. One day is not nearly enough. I talked about this yesterday. Folks, it's very difficult to do these back to back, especially when you get dark red yesterday and completely bright green today. Now, net didn't really go anywhere, but we are continuing a optimistic pattern overall. So pretty interesting move when it comes to the heat map. I mean, geez Louise, folks, everybody jumped in. So what am I at? -1, just because the fact that we are below the 50-day moving average. And the slope is still lower. Actually, I could switch that slope, folks. I could switch that because you can see the 20 is actually starting to move higher, which is why I have this +1. This could be a sweet little breakout, shorter term. Now, I'm saying shorter term personally for me, for the end of this week into next, depending on what earnings do, to where we could get a little bit of recovery above that 50-day moving average and start to threaten some of these higher levels. I'm not going to say that, hey, we're out of the woods yet, and the world is going to be great. Let's go ahead and buy, and you're going to be a genius in the next 10 years because you bought the bottom. I can't say that. However, the argument's out there that the unknown is pretty much known, and we'll see. These markets seem to ignore some bad news with the CPI and the PPI numbers. Right? Last week, folks, we had a little bit of a hiccup, but not nearly what we saw the first time. So these markets are ready for trials and hardships moving forward, and we'll see if the investor wants to stay that way moving forward. So there it is. Now, I've got a couple of trades that carried forward from yesterday. Yes, ETRs from yesterday, STNGs from yesterday, and I believe, I'm not sure if Newmont was, but it should have been because these things are continuing to do what I've seen. Past that, anything bearish has a gigantic green candle. Did you guys notice that? Because I sure did. Every single one of my bear watch lists has a giant green candle. So I'm not going to do much with it when it comes just to one day. Newmont, however, tied to gold, tied to the precious metals, where we know that the dollar has just been going gangbusters, they are continuing to show weakness. So not a lot to look at, but let's take a look at what I have. This is STNG. This is energy. And it did break out today. What I do like about this is it absolutely confirmed and moved higher above a little kind of an ascending triangle pattern here, folks. Let's see if I can get a better line. There we go. I want my red one that goes up. Very steep sloped ascending triangle pattern. The volume was pretty decent overall. It did increase over the last couple of days. It decreased a little bit today, but that's to be expected, especially against resistance at 38. It didn't really blow through it, although a 4%, 4.75% move, 4.33% move is pretty impressive. It did come off of its low or its highs, but it's still hanging in there. So something sideways to up moving forward. You're in the right sector. It just seems to work. So I liked it yesterday, and I like it again today. Here is Biogen. We're doing really well. Had a resistance level about the 220 mark. It's toying with it. It didn't quite confirm. Well, it didn't confirm enough for me personally, folks, but I absolutely love those higher lows that are set, that crossover that was made there in the beginning of July, the 2050 crossover, and a good push up. The next stop has got to be at the 225 mark. So I do like it. I'm pretty optimistic in this as well. Moving on, we've got Goog. Goog's been around for a little bit. This was more of a sideways trade for me that actually just recently showed a little bit of strength in a bull pullback. So what do I mean by that? Well, I'm taking a look at a range here about just below the 120 mark, and I just want to cut through half of these. And what I'm doing here, guys, is I'm taking a look back to the end of May, mid-June, and early July, end of June. And I'm just kind of glom them together at about 104, 103. So it's got a range. But what I do like, and what I'm specifically focusing on, is this pivot point moving higher above a crossing. That's right, folks. Let's get my little box here. A crossing 20-50 day moving average. So I like it. I'm a little bit more optimistic. Now guess what my target is? I'll give you 1 second to guess. 1. There you go. Good job. Yes, it's a 120. You're 100% right. $120 is going to be my target. I don't think that I want to go much further than that, especially if you're going to be for my Bollinger Band traders out there. You say, hey, it could hit the top of the range and come back down. I tend to agree 100%. One thing that makes me kind of follow suit with this is the fact that the volume has slightly been sideways to slightly decreasing, so there's reluctancy for any trader to actually push this through the 120 level. Now that can completely change based on change in sentiment over the market's behavior for the rest of this week and into next, especially going deeper into earnings. All right, so there we go for the bull side. Here's ETR on the sideways. You looked at this yesterday, and guess what? Here it is again today. I love this stock. I think it's kind of cool, and it's got a pretty decent range. I'm going to draw the box this time because sometimes a box is easier to look at than just a couple of lines. That's the range I'm talking about. Now, I do like it. If you want to get tighter, go for it. There is a little bit of an argument to be made here. Let's go out to this area. 113 to 108. Just below 108, maybe 107.5. So it just depends on how tight you want to get, depends on how long term you're looking for when it comes to sideways trades. But this could be one that should continue. It's in the utility sector, a sector that's not necessarily weak. It was strong, but it's a little bit in the area of, well, what do we do now? If the market's going to bottom and the investor comes back in and starts putting money back into the risky assets, well, then this might lose out. However, if inflation's still a worry, things start to get worse, we get closer to the R word, right, the recession word here, then maybe this might pick up a little bit. So it's in this la-la area of it's not sure what to do. At least the investors aren't sure what to do with it. So let's jump down to the bear that I have, and this is the only one that didn't have a bright green candle today. Yes, folks, I'm sure you could find more than just this, but in my little small list of 60, 80, 90, 100 stocks, every single one of them had a nice green candle specifically for today's movement. I do like this low base around the 55 level. So folks, if you don't want to play anything to the downside, this is something you could play in a consolidation area around the 55. So your calendar spreads, great idea here. Go ahead and buy that 55 put and sell the 55 put. If you want to go a little lower, go to the 52.5 puts, something like that. But something sideways to down might be kind of cool. But very difficult just from yesterday to today to get a brand new, revised outlook on new trades. It's hard to do unless the markets are consistent, and they are completely backwards today from what they did yesterday. Keep that in mind. Push pull seemed to go nowhere, but I am definitely going to err to the bull side. I have to. Strong move above resistance levels. Pretty much everything participated. That was the biggest key for me. I was expecting oil to drop, and it didn't, and that's okay because everything participated to the upside. This wasn't an earnings thing at all. It wasn't specific to any one stock. This was a general purchase or short cover rally or whatever you want to call it across the board. We'll see what happens over the next few days, and we'll find out what it was. But I haven't seen that many green stocks in a long time. Bullish push above back resistance levels around the 50-day moving average. Keep an eye on that, folks. You don't want to get too excited. As it did confirm, some have confirmed, some are above. Let's see what happens over the next day or so. Economics-wise and numbers-wise, it's going to be pretty light throughout the rest of the week. Housing continues to show signs of slowing as expected. You raise interest rates, we expect new home sales to go down. We expect new home builders to go down. We expect the home builders index, or I should say how bullish they are, should go down. And that's kind of going that way. I'd like to see that a little bit more into rents because that would actually curb a lot of the inflationary pressures, inflationary pressures on the consumer. Lower home prices and rents key to lower inflation. This is something that's really overlooked. We look at eggs cost this, milk cost this costs that much at the pump. But the big majority, the big chunk of change that the majority of people pay is mortgages and rents. So we'll see if that can help. Now today I didn't see much on the earnings docket there. Netflix and JB Hunt came out. Netflix, I believe, is up. Jeez. Yes, I saw it up a little bit based on the fact that they lost less subscribers than they thought they would. So it's one of those things that you think you're going to do bad and you don't do as bad as you thought. Does that mean you're growing, or does that mean you just didn't get kicked in the face as hard as you thought you would? Take it for what you will. It's up. JBH, I didn't get those numbers. There's going to be a whole slew coming out. Those are the only two that I saw for today. So keep that in mind, folks. Thanks for joining me. And if you've got any questions, you know how to get a hold of us. That's all I got for today. But moving forward, just be cautious. If you've got any questions, there are ways to get a hold of us. If you're new to Maverick, hey, nice to have you. Make sure that you reach out to us. And if you got questions, please. We'd love to know and help you along with things. And we'll take it from there. All right, guys. Once again, thanks. And we'll see you next time. Bye, everybody.